Hey. Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh, and a quick look at the market because like I was pointing out earlier as well, we have seen a sharp drop from the top of the session. So we're around 180 points lower compared to the top of the session. That's come through on the frontline index. There's been a big pullback in the banks that we've seen, and this fall today is really led by the private banks. So take a look at what's going on over there. The Nifty Bank Index right now is 0.4% in the red. We're seeing a 170 point cut on the Nifty Bank. It's over 600 points from what we saw at the highs of today's session. So some of the larger names will be up for you, the likes of IndusInd, Axis, HDFC. These are really the ones which are leading the fall in terms of the large cap banks. A lot of the IT stocks also in the past hour or so have really come in for some selling pressure. So take a look at Wipro, HCL Tech, all of these at session lows right now. So this is important to track as well. And through the day, we have been talking about how FMCG and the entire consumption pack is really seeing some cuts today. So Nestle, HUL, Britannia, these are some of the top losers, along with Reliance, which is also seeing some cuts today. What's gaining is, well, the Adani Group's, Adani Enterprises ports are the top gainers on the Nifty right now. And you have the entire metals pack, which is holding extremely solid. So something like a Hindalco, Tata Steel, JSW Steel, pretty much that entire pack is doing quite well in trade. What's important to note also is that the mid-cap and small-cap index is faring better than what we're seeing on the frontliners. But they have also corrected quite a bit from the top as well. Still holding with around 0.5% in terms of a gain for the mid-cap index. But like you can see on your screen, we have moved to the low point of the day there as well. So that's what's happening with the markets. We have our guests joining us, so let me introduce them because there are lots of queries which have come through. Sharad Avasthi is head of PCG research at SMIFS, as well as Rajat Bose join us to take all of your questions today. Sharad, Rajat, thank you both very much for joining us. Rajat, before we start with the queries, if I can just get a technical check from you on what we're seeing on the markets right now. This is pretty much the pattern that we've been seeing, right, over the last few days, that towards the end of the trading session, we see this pressure really build. How do you look at it today, and would you take a call on the index?
Good afternoon, Pavitra. Thanks for having me. I would say that regarding the indices, both the Nifty and the Bank Nifty, they are actually showing a distribution pattern, and now the indices are below the 200-day exponential moving average, and they tried a pullback, but the pullback had not been successful, and so it is falling. And chances are that you will see that the market, at least in the short term, is headed down. I mean, regarding the Nifty, I would say that if it were to break below, say, 17,000 level, then 16,800, and after that 16,650 could be the targets for on the downside. 16,800 either way is quite a strong support area. If that gets taken out, then there will be a lot of selling. And if you talk about the Bank Nifty, I was just reviewing bank stocks as well as the Bank Nifty. The Bank Nifty as well as even stocks like Kotak Bank, IndusInd Bank, HDFC, or even say State Bank. You name any bank, the bank stocks are looking pretty weak. In fact, it is suggesting that the distribution over a period of last 6-7 months, now the Bank Nifty is actually showing that it is going to go much further down. In fact, a stock like Kotak Bank might actually hit 1400 levels as well. So you can imagine that the kind of a negative technical picture that is emerging on the bank stocks, right? That's it.
Oh, absolutely. And this is after the kind of 700-point downtick that we've seen from the top of the session on the Nifty Bank. But that's what's going on with the market. Let's get you our queries now because we have plenty of them which have come through. Nagesh calls us from Hyderabad. He's actually on the line with us now, and he has an investment query. Nagesh, go ahead. Take us through what your investment query is here.
Yeah, good afternoon. I would like to invest in ITC at these levels at 380. I've already invested at 250 2 years back.
Okay.
I am bullish on ITC, the reason being in comparing with other FMCG like HUL, Britannia, which has a period of 50 and above, and this has ITC has a period of only 25, 26. And every 5-6 years, ITC also gives bonus, and I feel the bonus is also due. Am I right in my thinking and can I go ahead and invest at these levels?
All right, let's ask our guest that. By the way, the ITC has seen a huge move, right? In the past year, it's up 60% in 1 year itself. Sharad, I want to come to you first on ITC. Is this still a good bet at these levels after the kind of big up move that we've seen? And you know, considering that he wants to invest, he's already bought at 250. So just adding to positions here on ITC, good call.
A good call if you're happy with a target of somewhere around 450, 460. The problem with comparable valuations is that today you're comparing it to a lever or something which is trading at 50, 60 times forward. Maybe those multiples come down over the next 1.5 years. So where will ITC stand then? ITC historically, beyond the FMCG part, I think the demerger is the bigger trigger that can happen, as and when it happens, if it happens. That would be a big trigger for the company. But otherwise, on a status quo, if the business is to continue, we are expecting a 15-16% kind of CAGR over the next 2 years. So considering 25-26 times, I think somewhere around 450, 460 is the fair value. So if for that target, I think one can continue to hold.
All right, can continue to hold or maybe buy at these levels with a target of 450 or 460. Rajat, how do you think this one looks on the charts? I mean, would you still think that this is a good level and the up move can continue? It's up 14% this year, I mean, after the budget, right?
Well, Pavitra, first of all, a disclosure. I personally hold ITC shares in my portfolio. Having said that, what I would suggest is that well, the investor would do well to actually wait for some time, because even if you look at the weekly chart of ITC, that is suggesting that at higher levels, especially between say 380 and 395, a lot of selling is taking place, and chances are that it would seek lower levels. So my suggestion would be that just wait, because the market is not giving the kind of signals in which you will confidently buy. Even if you are buying ITC, me and the investor in question, we are holding the same stock, but yet I would say that since you have bought at a much lower level of 250, if you wait, I think a minimum of 350 to a level of say 320, 330 you could get. Around that time, if you buy, that would be better, because if you jump in right now, there would be, it is not as if ITC would not suffer if the whole market suffers. That's the point.
All right, got that. Nagesh, I hope that helps you. That's a complete technical and fundamental perspective on ITC. The next query coming in is from Meera Ramesh Iyer, who writes to us from Bengaluru. She holds 2,000 shares of Granules India. She says that she's a long-term investor and wants to know whether she should hold or sell at current levels. So she got in at 295, Rajat. It's currently closer to around 287, down 10% this year. But what do you think? Worth holding from a slightly longer-term view?
Pavitra, I'm likely to disappoint you today, because most of the stocks that you are actually discussing, they are showing signs of distribution and they are testing the 200-day exponential moving average, just as the indices have done. In the month of February, they have tested, the indices have tested the 200-day exponential moving average, bounce back from there, and again, now the indices have broken down. Granules yet to break down, but Granules weekly chart is suggesting that there is likely to be some lower level, I mean level of 240 would definitely be tested going forward. So again, I would say my rating on Granules would be buy on declines, not at current levels. One should wait, because you see, if your acquisition price is lower, then your chances of making money would be that much greater.
This is someone who already holds 2,000 shares of Granules. So should she get out right now if you're saying 240 can be tested?
If I were in his shoes, I would have got out.
All right, got that. That is the call coming in on Granules from a technical perspective. We have another query coming in. This one is from Akshay Jain, who calls us from Pune. He has made investments in IndusInd Bank and he's on the line with us. Akshay, go ahead. Please take us through what your investment query is.
Hi, good afternoon, Pavitra. I have IndusInd Bank, 500 shares. I have ICICI Bank too, 500 shares. I want to keep this shares for a longer term, for 5-10 years. So can I accumulate these banking stocks?
Okay, what price did you buy IndusInd at?
IndusInd was bought at 1080.
Okay. So let's get to that one first. Sharad, IndusInd Bank bought at 1080. So, I mean, he is suffering a loss on that one. How would you look at this? Do you think he should hold for a while? And he's also asking if he should buy more.
Yeah, I think he can continue to hold. Valuations are not expensive per se. The recent extension issue overhang was there. That has also worked out very well. Over the next 2-3 years, at least, we don't see any kind of NPA pressures mounting for most of the banks, but the advances book ramp up should be very strong. So, and IndusInd Bank is one of the cheapest banks within the private sector space. So most of the banks are trading at 3.5 times price to book. This one is available at 1.6, 1.7 times. And I believe over the next 2 years, easily 17-18% kind of CAGR should happen. So conservatively, if it trades even at say 1.52 times, I think somewhere around 1800 could be a target on IndusInd Bank. So I think IndusInd Bank he can continue to hold, and for the long term that he's talking about, 10 years maybe, this could be something that could grow into 5-6 times also.
Okay, he also said that he also wants to call on ICICI Bank here. So from a 10-year perspective, looking good?
Yeah, certainly. I think for most of the banks, the perspective going forward should be very good. Given the stringent norms that have already been put into place, I think they will have to be very innovative to goof up this time around over the next decade or so to make large pools of NPAs come into place. So I think the probability is very low, but 10 years is a long time. But at least 3 to 5 years, I don't see any kind of big hiccup coming in for the banking sector.
Right, got that. Rajat, we were just talking about banks at the start of the show, but you know, this is a little bit of a different query because he's looking at a very long time horizon here. IndusInd Bank and ICICI Bank, good picks, and if you would suggest anything else as well.
Well, for an investor who is willing to hold a position for the next 10 years, I would say that more or less there is a consensus that India is going to become the third largest economy in the world. What does that mean? That means that overall, over the long term, meaning 10 years or more, we are going to grow anyway. So if you are holding good banks, definitely you will make good money. And I would suggest that in that case, you buy quality. In the banking sector, I feel the quality is available if you buy HDFC Bank, ICICI Bank, and if you want to bet on a new bank, then I think IDFC First would be good. Regarding IndusInd, I mean, asset quality may not be as good as ICICI or HDFC Bank. So I would prefer those two, but if he wants to carry on, then he should be buying at lower levels. For the time being, IndusInd Bank also can go down. It can go down by another 10% from the current levels because the distribution sign in IndusInd Bank is very, very clear. But as I said, that since he is willing to hold for 10 years, these kind of gyrations may not affect him much. But even if that were to be the case, if there is a possibility that if I wait and I can actually buy at a lower level, then I would have opted that line of action.
All right, got it. Akshay, I hope that helps you. That is the call on both of the, the investments that you have. That is ICICI Bank as well as IndusInd Bank, and some extra options if you're looking at banks from a 10-year perspective as well. But with that, we do need to get into a short break. Rajat, Sharad, please stay with us because we're going to be back in just 2 minutes and there are lots more stock queries coming up for you. Welcome back. You're still tuned into Your Stocks here on CNBC-TV18, and I'm going to try and squeeze in one last query before we wind down. John Paul writes to us from Bengaluru. He holds 100 shares of Muthoot Finance, which he bought at 1144. He's a medium-term investor, and he wants to know what he should do with this investment. Should he hold or should he get out? Like you can see on the screen, he is suffering a bit of a loss over here. Rajat, your call on Muthoot Finance, I mean, it has been declining for a while now. The question is, do you think in the medium term it can reverse? Because currently it's closer to 918 and he bought at 1144.
Well, if you look at the weekly chart, if you look at the daily chart, they are showing a strongly trending down counter. I mean, Muthoot is very weak and Muthoot can go further down, and especially when you break down below the 200-week moving average, that means that the long-term trend has turned down. So holding on to a stock that whose long-term trend has become down, then I don't think you should continue to hold it. And secondly, Muthoot is in the finance space. Interest rates, even though a lot of speculation that RBI may not increase interest rates much, but my study of interest rates history tells me that once a 40-year-old downtrend in interest rate having come to an end in 2020 at 0% world over, I don't think within a period of say 2 or 3 years the trend would actually reverse. I mean, that is the uptrend that has started now. So higher interest rates mean that finance companies, at least till such time they restructure their portfolios with higher interest rate bonds and all, they will suffer. So it is better to exit Muthoot Finance. This is a firm exit call.
All right, firm exit call on Muthoot Finance. But we're going to have to wind down on that note. Sharad, Rajat, thank you both so much for taking out the time and taking our viewers through all of their queries. But with that, it's a wrap on this edition of Your Stocks. We leave you with a very flat market, one that has come down 170 points from the day's high. The Nifty Bank 150 points in the red as we speak. Thanks for tuning in. And remember, you can always email us your queries and we will keep taking them up with our experts. Stay tuned. Closing bell comes up after this short break for what promises to be a very exciting last hour of trade.